Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. mid-session brief. We got a lot to go over today. We got the CPI data that came across the boards and really has made a lot of waves in the markets. An incredible whipsaw day. I mean, I will tell you that days like this are very challenging to trade. The way that the whipsaw developed today in the U.S. equities indices was really, I won't call it baffling, but it was a big-time move. So good to see everybody back in the room. Mark Corp, good to see you. Bobby Bob, good to see you. We've got crude oil. Today's sort of been a defining day for crude oil, and I'm going to show you exactly which level came up big for us. And it was a monthly level, and it really has really preserved the long-term sort of top side of that WTI crude oil market. A lot going on with our trading competition, a lot going on in general. So I want to, like I said, welcome everybody here, YouTube, Trading Room. If you're on YouTube, if you're on X, if you're on all these things, Animaco, good to see you. If you're in all these different platforms, we're everywhere now. If you're there, come here. Go to howtotrade.com. Check out our trading room. Check out the market analysis. Be sure to check out one of Connor's live streams if you haven't already. Typically, folks watch them both, but definitely get in here. Past stream library. We got it all for you, and I'll take any questions you want to ask me. Anything. I don't care. We're an open book here. That's for darn sure. One thing we need to start off with, though, very important, the United States. This is September 11th. 2001 was a sort of a defining day, really, in foreign policy for the United States for, you could say, 2 decades. A lot changed on September 11th, 2001. So I wanted to pay a tribute and a bit of homage to all those folks that served in the military and all those folks, the first responders and the folks that were involved in 9/11. I remember it like it was yesterday. I was a college kid. I was on my way to class. I got the news, and we didn't really know how much everything was going to change. But everything changed, and a lot of things financially changed that day. A lot of what we have today for global finance and our markets work and geopolitics was crafted in those few hours there on September 11th. So it's very difficult to overstate the importance of a day like today, but I did want to address that because I think it's very, very crucial to what we do here in the active financial markets. So that being said, let's get out to price action. The US 30, it's been in an absolute crash mode today, but now it's sort of rebounded. We were down about 700 points at the low. We're back to about 236. And I will tell you right now that it's absolutely a staggering whipsaw. Let's see, Jay Ski, good to see you, Jay. Let's see, Crypto Gambles, good morning. Along the ES, how high can we go? Don't be surprised if the ES buys back all of today's losses. It's already almost done it. I'll show you the ES here in a second. But this US 30, nice big sell-off. We were talking a lot about bidding this level down here, right from the middle of our golden zone, 39,750. I think that's a huge zone. I'm looking forward to actually getting involved there. But look what happened today. Big time sell-off in the Dow Jones Industrial Average early in the session. We came off big. We hit 50% of this weekly retracement sequence right on the nose, 39,997. Now, is it because of the 50%? No. It's because it's right in the proximity of 40,000 even. We went down. We checked out that level. The bidders stepped up and said, no, we like the long side of this market. We think it's time to get involved. We're still buying dips, guys. We're still buying dips. Now, I've made no bones about it. I've been bearish on really equities, and I've talked about potentially a big sell-off, just sort of address Crypto Gamble's question. This is what my chart looks like. I always get this, Shane, are you a long-term investor? Are you a trader? I'm a trader. I'm a scalper. But definitely you can see exactly all these lines mean something to me. They're all moving averages. They're all Fibonacci's. They're all range numbers. But take a good look at what's happened here today. This was epic. My second range number, that's secret sauce. I'm not going to let you in on that. But what I will say, that's an inverted, it's not an inverted hammer. That's just a hammer candle. Hammer candle stick right around 54 and a quarter. If you're trading the September E-mini futures, E-mini S&P 500 futures, absolutely huge. So big time rally. The buyback is on. You'll notice the CPI candle was not, the CPI candle did absolutely nothing. Absolutely nothing. We've sold off big. We washed out all the longs, and now the new longs are in the market, and they are dominating. You'll notice my Fibonacci retracement sequence. I can tell you that I made a little bit of money right there at 38% on a scalp. I got hammered at 50. I never trade 50. I took a shot at 50 because we were the E-minis and we were the S&P, and we were way down. I took a shot there. I took a shot at 62. Got paid at 78. Still a negative day for me. I'm not very pleased at all about this whipsaw action. This is what you'd call a V, and this is very rare from my experience. Typically, when you see something like this, you see a big sell-off, and then we trade sideways and we creep over. This is a plunge and then a retracement rebound. Typically, you only get these things on news days, big news days, like CPI, like a Fed announcements or something like that. So big time stuff there. To answer your question, how high can we go? Well, I mean, I still say you probably make new all-time highs, but if I'm an intraday trader, definitely have your eye on that spike high, 9 a.m. Eastern. There's your cash open, boom, boom. Out go the lights. The buyback's been on ever since. I think we take that out, and we're going to rally probably up to 55 and a quarter, maybe somewhere in there. We just got to wait and see. That's about another 100 ticks away. I think it's possible. Let's see. Oluri, good to see you, Oluri. Welcome. Let's see. Anameko, do you think tomorrow's good news, core PPI, and unemployment claims will have the same impact on a market? No, it won't. Tomorrow's PPI is a good number. It's a solid number. It's a number that I like to trade. Nowhere near as big as CPI. We're going to unpack CPI in a second, but PPI definitely the runner-up. It's not necessarily the king or the queen of the party. So definitely something to think about. Don't think PPI is going to move it like CPI did. That ain't going to happen. That ain't going to happen. All right, guys, let's get back over to our trading competition here. We crowned a winner today, and the one great thing about a competition being over is we got another one coming. Right there, enter your email address. If you need the link, hit me up on the private messages. I'll be sure to give it to you. Just in our live chats on these other platforms. We're going to go ahead and just disseminate that right now. So I put that out. If you haven't already signed up, get in there and sign up. Will you be our next winner? You could be, maybe not. But this was a really a serious competition that a lot of folks took very, very, very seriously, and some traders really got it going. You could see Olive really led wire to wire, and it was an impressive showing. So congratulations, all of 2017. I've had the opportunity to field a few private messages for you. I like your style. I think that clearly you're a high-frequency trader, but you were very humble in the private messages, and you also knew that you really had to keep that performance up to win this thing. And I have to tell you, you were on top the entire contest. But Chemical made a run on you and did it in about the last 3 or 4 days. This last 24 hours was fantastic stuff. Also, can't ignore number 3, Mail to Sing. I mean, this is a staggering amount of trades. I don't know how many computers you had running and how many EAs and automated strategies. That's a lot. I don't think I've ever 40,000 trades in a month. Well, it got you $2,000, got you 2 G's. So I really wanted to point that out. We've got some other great showings here. Number 4, I mean, sad here. This is good stuff. 215 trades to just massive returns. Kaya, I can't pronounce the names, but 85 trades. These are solid showings. These are all real solid showings. So I always say that if you made money in our contest, fantastic. If you want to try to make money in real life and you didn't get rewarded from our contest, get into Switch. This is our sponsor, our brokerage sponsor. You got all sorts of options. I was actually asked earlier today, Shane, what are the minimums? How do I get involved? Go to switchmarkets.com, hit up the create a live account, create a demo account, and you'll be rocking and rolling in no time flat. And you'll be ready to trade for real money. And if you're in there, if you're in that contest and you're crushing it, crush it for some real money. I mean, hey, listen, I'm full disclosure. I'm one of those people. I'm not going to BS you. I got hit today. I got hit pretty good today. But the money that came in last month was very good. The money that's going to come in this month is very good. And sometimes you just take a tough day. You take one on the chin. That's what happened to me. So if you're in that contest and you took one on the chin, come back for the next contest. If you were in the contest and you made a bunch of money, maybe translate that into a small account. Start trading a $50 account. See how you come out. Something like that's something. If you make money in the contest, you can make money in real life. You just got to be careful with what you do with risk-wise. A lot of times it's easier to take risk when it's demo funds. That's for sure. When it's real money, I was watching the $100 bills fly out of my pocket today, and I'm still smiling. I'm still happy because I know over time I'm going to crush it, but it doesn't make the losses any easier, and that's why when you're losing, put a tourniquet on it. Come back and fight again tomorrow. Come back and fight again Monday. That's what this game's all about. It's not about trying to do everything right now. Get ahead, stay ahead, build your account. That's all there is to it. Dollar yen, we had a pretty good recommendation out. Let's see. Mark Corp, the US 30 has been good to me today. Well, I'm glad you got on the right side of it. What did you get, the dump, the initial dump, or did you get the buyback? I'm curious. I don't know who was stepping up buying into that thing. We were in an absolute falling knife situation. And if you caught that reversal, you made a lot of money. No two ways about it. In any case, right here, dollar yen, I outlined earlier, buyback. You got the buyback. Well done. If you got the buyback, well done. Olive, I got your message. I'll be sure to get back to you right after the stream. Right here, this was the dollar yen, and I saw a lot of messages in the live chat, and I was like, okay, somebody's short yen, somebody's long yen. Okay, that's all great. For me, I was really focused and fixated on this year's low, right down there at 140.98. Now, I encourage everybody else to go out, check out yesterday's live stream. I was a bitter 141, no questions asked. You always remember those big numbers: daily highs, daily lows, weekly highs, weekly lows, monthly highs, monthly lows, yearly highs, yearly lows. Remember them. That's key. I mean, this trade right here is an absolute layup. That is January right there, January 2024, beginning of the year. That's a low. That was this yearly low. Look where it is, 140.98, right at 141. What's the low there? 140.70. That was a fantastic trade. Now we're back up to 142.08. I mean, you took an easy 100 pips off of that. Let's go right down to a 4-hour chart and see where we're at now. Not a 3-hour chart. On the Forex, I love the 4-hour chart. It's my bread and butter, just because we are in true 24-hour markets, specifically with currencies. And the beauty about that currency, that OTC, is when you're talking about $5 trillion in market cap, all the rollover, all the turnover, that means you've got steady volume. You got steady volume throughout the 24-hour cycle. You can get away with a 4-hour chart. Now, if you're trading U.S. equities indices, you probably want to focus on the U.S. session, just because that's where the volume is. A lot of that other price action, it's not so good. It's not so good. So take a good look here. U.S. dollar, Japanese yen, 4-hour chart. You'll notice right there was our hard test, and our low went right to 140.70, and you got the big bounce up. So this was a great trade. I hope everybody got it. If you didn't get it, that's okay. If you want to know my train of thought on something like this, go back, check out yesterday's stream. It's in our past streams library. You can get in there and check it out at howtotrade.com if you're not already there. All right, so that's big. We do have a gold. Gold is something that I cover every single day because I get a lot of questions about gold. So I say, hey, if you want my opinion on gold, I'll give it to you. Today I had a gold futures trade that was very good. I had an opportunity to step up and buy a range number, which it was a pretty good trade. I really was getting greedy, though. I wanted something else to develop on the initial sell-off, but we didn't get it. Now, big picture, what does all this mean? It means that we're right at the all-time highs here. Spot gold is going to be 25.31.79, and your number is going to be a little bit different depending on your brokerage. But right now, take a look at where we're at. I mean, we're right there, 25.16, somewhere in that zone. I would love a big, deep pullback. Full disclosure, I would love a pullback down in here to 2,300, maybe 2,250, so we could take an investment maybe for the rest of the year. But we're not going to get it. We have to be we have to be realistic, and I'm always very realistic about what I talk about. I'll throw some levels out there, and sometimes those are off in the distance. But the idea is that if we get our level, we're going to make money with it. My approach is high winning percentages. I don't like losers. Today I got hit with 2 losers in a row. That doesn't happen. Very rarely. Today was the day. Last time it happened was last Fed day, last month. Or excuse me, in late what was that, late August or July? Late July. Doesn't happen very often. But today it did. And why? Big time news day, chaotic price action. Should have been a little bit smarter. Had a chance to walk away. Let them run. That cost me. Cost me big. Happens to everybody, guys. I've been doing this since 2011. It's part of the game, but there's one thing you're never going to catch me doing on these streams, and that's smile, telling you that losing's okay, because it's not. So as soon as this stream's over, I'm going to crack open my notes and take a good look at how those losses could have been mitigated or avoided. That's the bottom line. Learn from your losses. I have to tell you, though, another pretty darn good day trading gold. We talked a lot yesterday about this all-time high level and all of these spike highs in here and how that's probably going to be a pretty good area to step up and sell. It was. All-time highs right up there, 25.31.79. What's today's high? 25.29. You're right there. We're selling 25s. I believe my sell was, what was it up there? 27.50 I was talking about. 27.50, $2,527.50. That was the sell, and it was a darn good one. You got yourself about $8 on the play. Real sort of tight doji setting up. It looks to me like we're going to break and go high here with gold. If, in fact, we do wash out this all-time high, which has been tested and tested and tested, eventually these things give way. It will break. The question is how high do we go? My guess is probably real simple, 25.50, something like that. Next big round number, maybe somewhere up in here, maybe 2,600, something like that. that. So I'm watching this relatively closely. I want to see a break and then a pullback, and then we'll look to get long and step up and buy into this market because I think gold is definitely going to be a bid. As far as your 4-hour chart, what can you really do with a gold right now? Not much. There's your CPI 4-hour bar, huge, great, big, messy. What do you got now? Sort of the buyback. That's the theme today. A lot of pressure on that CPI number, and now the buyback is on. So what was the big deal with CPI today? Why exactly is everybody sort of running for the hills or believing that maybe the sky's falling in the world of finance? It's weird. It's been a weird news cycle. Tuesday, it started last night with the U.S. presidential debate. I'm going to cover that. I actually put some tweets out last night as I was watching the debate, or it was shortly after, and we watched crude oil rally about 1% as sort of the debate unfolded. There's a few reasons for that. I'm going to talk about that. But today, US CPI was the headliner, no question, and also EIA crude oil stocks. So we're going to go into depth on crude oil because there's multiple market drivers. But let's go ahead and start with CPI. Now, the big question here is CPI up or down? Bottom line is this. Our report came in largely in line. For those of you that watch Connor trade the action live, I think that I thought I did a pretty good job. He got in there, really broke down price action, broke down market expectations and what the numbers meant. For me, this entire report is based on what I would say dual reporting. And I'm being very, very kind to the financial media because I don't really like many of them. I mean, I believe it or not, I talked to a reporter from Business Insider that I did like, very, very smart woman. Understood a lot and wanted to learn more about the markets, and I liked that a lot. But I see a lot of these folks that write pieces and they're just wrong, they're flat wrong, or they're pushing a narrative, and it's embarrassing. But if you do see something like this, consumer price index year over year came down 2.5% beneath 2.6 expected. Some reporters made that the story. Well, CPI is coming down year over year. Yeah, but what's it doing month over month? Okay, still came in as expected. What's the headliner here, though? The headliner's core CPI. Core CPI is what we're going to talk about right now because we expected 0.2% growth, the same as last month, and look what happened, 0.3. That means that still ticks higher, and look at what it did year over year, 3.2%. It came in static. So in the core department, absolutely nothing has happened. But look at your overall CPI. You came down just a little bit. Now, why would you say year over year that CPI number's down? If you compare it to where we were last year, we were dealing with more expensive crude oil, about $20 a barrel heavier. All right, so now we're at $65. That's the difference. Do we believe that the bear market in crude oil is going to last? Nope. And I'm going to tell you why here in a second. But core CPI is really the headliner here. So what is it? Well, core CPI is the consumer price index minus food and energy. That's it. They throw food and energy out because, well, the idea there is those things are so volatile and they fluctuate so much that when we actually look at a reading of inflation, we don't want to include those because it skews the numbers. That's the idea there. I don't believe in that, but it is what it is. So a higher than expected reading should be positive or bullish for the USD. A lower than expected reading should be negative or bearish. So what does all of that mean to us? Well, it means that core CPI is up, right? So that's theoretically bullish for the U.S. dollar, yeah? If it's going to be bullish for the U.S. dollar, a stronger dollar typically puts pressure on stocks and commodities to the downside. That was certainly the case initially. Is that still the case? No, we had a whipsaw day, so the market priced it in, and it sort of ignored the outcome. And a lot of that has to do with interest rate expectations. I'm going to unpack that tomorrow because we got a lot to cover today. But take a look at this. This is the chart that I want everybody to remember about inflation. This is going back, about a year? And it's just a steady gain in the core CPI. This is the raw index number. This isn't the growth number. The raw index number is how we figure the growth. We just minus out the difference and divide it, and that's essentially what you get. But look at this. It's a 45-degree, sort of a 45-degree trajectory. We flatten out a little bit in May and June. That's when everybody really was waiting for the big rate cuts. And then you get another jump in August in the raw data. I mean, that's absolutely brutal. This is the other chart that you really need to be aware of. And if you're in college, we have a lot of young folks come through. If you're in university and you're taking things like economics, I did it. I took micro and macroeconomics, and I sat there and I believed what the professor was telling me because I was young. Hey, PM says, good to see you. Because I was young. I didn't know any better. So I sat there and I said, okay, well, whatever the professor says is great. And believe me, that's fine. Whatever anybody says, question it. Question everything I say here today. I'm really not here to make any friends. I'm here to help as best I can. And I want to I want to make sure that you guys sort of understand exactly what we're talking about here. But this is the bottom line, guys. This is an all-time look at CPI. Now, when you're in school and you're talking to an economics professor, what they're going to tell you is they're going to say, listen, CPI is always going to grow. Prices are always going to go up because fiat currency loses its value over time, and that's the system. That's the way it works. So, Shane, when you show us a chart like this, you're not being genuine because inflation is never flat. Flat inflation's bad. And I would say not so fast, my friend. This is a steady 45-degree jump. No question about it. From 1985 all the way up through probably when? 2020. That's a steady growth. We understand that as long as our wages are going up and we can afford to live, inflation's not killing us. But what happens during COVID? They basically wrecked the financial world with unlimited quantitative easing. I know it. Jay Powell knows it. Everybody in the FOMC knows it. They all know it. So look at, what do you got here? You have a serious trajectory that has not slowed down. And until we get maybe something to at least slow down into this 45 and not be just going straight up, we got a problem. So what are we going to do now? We're going to cut interest rates? That's the idea. We're going to cut interest rates next week. I'll have FOMC Live for you, and we'll dive right into what all this stuff means and where our economy may be heading. Now, for me, that's why everybody's scared, and I think that's why your market, we're very, very spooked earlier today. A lot of angst in there. We have a VIX that jumped a little bit, but now it's down. I mean, this is a crazy trading day. No two ways about it. Wanted to catch up there on the live chat. Jay Ski, thank you. Army here with 2 tours to the Middle East. Well, thank you for your service. My family served. I did not serve. Father served. Both grandfathers, uncles all served in the military. So today, 9/11 is an important day. A lot of friends served in Afghanistan and in Iraq. So definitely a big day. So thank you for your service. You're very welcome for mentioning everything. But it's important. It's an important day. It really is. Okay, in any case, Euro USD 4-hour chart. What do we have here? Well, I mean, we have a lot of different ways to trade this action. You've got your big, what do you got there? You got sort of an overnight. You got a CPI. Now what do we got? A flat market. Now, coming up for your euro, what do we have? ECB announcements. ECB announcements come across the board tomorrow. That's going to shake up your euro in a big, big way. So if we're looking at trading the euro USD, which I know a lot of you are, number one, it's sort of a rotational market. Is there any way that we could trade it? We have some strategies in the trading room. One of my favorites is a strategy called the pendulum. We've got a video, we've got PDFs, we've got everything you need to get up and running with the pendulum. The idea behind a pendulum is to find a range that means something and find a market that's more than likely going to move flat. I think that this range, I would be surprised if the ECB sends the market out of this range. It certainly could. You certainly could get a directional move. But for me, I've got, what do I have, about 12 hours of prime trading here. I think we have a chance to trade the pendulum if we haven't already traded it. In any case, the basic crux of the pendulum is this. I'm going to go ahead and I'm going to show you sort of the inside baseball here, but you're going to need a little bit of education on how to trade this strategy so you can get up and running with it yourself. I like it. Go ahead and check it out in the strategy section of our Learning Academy. But take a look. Spike high, spike low. That's theoretically resistance. This is theoretically support. We're looking for a 10% bounce off of support, and then we're buying the market. We're looking for a 10% pullback from resistance, and then we're selling the market. 50% of our range is going to be our target, which is going to be somewhere right around 110.28. And then right in here, what do we got? We got a fixed risk, meaning it's going to be a basic 1-to-1 risk versus reward ratio, and that's going to be 110.07 to 110.28. Which is going to be a 21 pip risk. You're going to take 21 pips right down there. And what are we going to be? Somewhere right around 87, I believe. That'll be our stop loss. Stop loss is there, 1-to-1 risk versus reward. We buy here off a bounce. We sell up here off a pullback. And that's basically how you trade the pendulum. If you don't understand a word I just said, don't worry about it. Get into the Trading Academy. Check out the video. You'll learn. We got PDFs. We got trading guides. We got all of it. You'll learn how to trade the pendulum in no time flat. Now, for me, what I'm looking at for the Euro USD, and it's definitely a big one with this news cycle, I like macro levels. I trade the macro levels on short time frames. When I find that when my levels come into play, I have a very, very good winning percentage. And number one, I got to make sure that I get my right golden zone, my Fibonacci golden zone template up. But this is what we're looking at. Now, if in fact we do break and that pendulum doesn't work ahead of the ECB, that's great. I don't care. I mean, the risk is minimal, but what am I looking to do? back end of our golden zone, right around 109.39. I think a person could step up. I got a 13 week EMA right down there too at 109.63. So I would be watching relatively closely that 55 area, maybe 50, 54, 50, somewhere in there. That's not a bad bid. So if we do get a big sell-off, maybe just another 50 pips, 60 pips on the ECB, that's a high percentage trade. So I would be looking to buy that dip. I don't think the USD is done bleeding just yet. I would not be surprised if the threat of recession becomes greater and greater if the Fed gets more and more aggressive. That's exactly what I would definitely recommend that, understanding that dynamic that the Fed is going to ward off a recession at all costs. That means rate cuts and aggressive ones. We're not going to get one next week. We're going to get a quarter point next week. We'll talk more about that tomorrow. But right now, I'm looking to bet against the dollar, not necessarily on it. Even though today, I mean, it was an interesting session, no doubt about it. Going to want to watch that one there in the Euro USD. I think that's a pretty good bid as well. All right, we did have a lot going on in U.S. oil. U.S. oil, full disclosure, is my bread and butter. I'm a commodities trader by nature, by heart, I guess, and by experience. So my expertise really lies in WTI crude, 65.33. That's not an exact area. It's not an exact area. I'm not going to draw this Fibonacci sequence and tell you, oh, that's perfect. But here's the thing. Remember, the long-term analytics for U.S. oil that you're seeing reported are largely incorrect. They're not right. You have to understand that back in April of 2020, crude oil traded negative, and it was down around $38 to $40 a barrel. Negative. Okay, now if it's negative, and I'm going to do something like a Fibonacci retracement, how can I do that if my charts only show me that it went to 0.1? Now, the easy way to do this is just don't even worry about it and trade real short time frames, and we're going to get to that in a second. But big picture, this uptrend that really began after COVID is still very much intact. So when I start to hear people talk about a bear market, Bobby was asking me, Shane, am I bullish or bearish? Is the market dynamic switching? What do we do? We don't do anything just yet. We're still long-term bullish. Now, if this 65 area sells off, then we start talking about maybe stagnating around 50, 55, then I'm going to say, yeah, it's a bear market, but I don't know that it goes much lower. For me, I think we saw a lot of institutional bidding step in right around 65.50 today. And they sent that, maybe yesterday. I will look at the chart, but it really did blow up a couple of bucks. So now we're at 67. Are we bullish or are we bearish? Well, if we believe the bottom of the market is right now, then we could probably just buy it and wait and hope for a big rally. But there's so much that goes into WTI pricing. And it's right now, it's sort of a dual. Well, I mean, it's not really a dual anything. It's I won't say one trick pony, but I'll definitely say that we have one market driver that's influencing WTI crude oil, and that's politics. I'm going to go over that in just a second. But in any case, you saw yesterday we came down, we hit that zone really perfectly and went up. I'm going to go ahead and take that level off because I don't really know that we need to focus on it. But this is what we're looking at on a 30-minute chart. Now, what did we have right there? Right there's your news bar. We had a nice big sellout. We washed out all the intraday longs. Everybody that was holding longs got washed. And now we rallied. So we saw a rally across the board. We saw a rally in crude oil. We saw a rally in gold. We saw a rally in the U.S. equities. It all sort of came to be when that dollar started fading. So initially we saw really a hawkish dollar looking to crash the markets. Well, the hawkish dollar really backed off. So I don't know if somebody at the Fed said something, if there was some leaked information. Believe me, all that stuff is very, very true. But it does happen. But right here, if I'm trading WTI crude oil late day trade, you've got a nice big wave to work with there. Spike low, that's your daily low. That's your daily high, your pullback zone right there, probably 67.03, something like that. You could probably bid 67s and get away with it. You got about an hour left to trade WTI of premium trading. Maybe you get it, maybe you don't. I would sit and wait. I don't know that I would be involved in any way, really, at this juncture in WTI. I wouldn't be holding shorts. And I wouldn't be holding longs either. I would wait for a move toward the close and then look to step up and capitalize on it aggressively. If you're going to do it, make it worth it. As far as what do we think, U.S. oil could do here? Like, let's say I wanted to outline some trades for tomorrow. What would I do? I'd go to my dailies and I'd say, all right, what do we got? Well, right there, you sort of have a spike high. Yeah, real big sell-off there. We're just sort of filling in. I'm not interested in that. If I'm going to sell this market, I want to see a decent move before I sell it. Something like this could work. Selling 70s. 69.95, 69.75s. That's a great sell going into tomorrow's session. Weekly Fibonacci retracement sequence. Right there, you have a sort of the high from that week of Monday, the week of 26 August 24, and then we get into September. So you got late August, early Sep range. You got an opportunity to step up and sell right there with a little bit of confidence. I would be really fixated on that 70 level. I think you're probably going to get it. And if you do get it, you're going to have a chance to trade it and make a few bucks. And that's really what we're looking for here. All right, everybody, we got just a couple other things about WTI crude oil, and then we'll go ahead and maybe take a look at maybe natural gas or something like that. But I think those are the markets that are on the move today. Yen trade was a great one, I'll tell you that. News of the day, you can see right here, NBA 30-year mortgage rate. I cover that every Wednesday. Comes out early in the morning, 6.29%. That's big time. We were about 7.25%, 6 weeks ago, 7 weeks ago. So these are definitely on the decline as we anticipate those Fed rate cuts. And like I said, we're going to unpack all things Fed in the next week or so. EIA crude oil stocks change. I did want to cover this because it's important. As you can see, we've got sort of 833,000 barrels. You got a bit of a supply build, which is sort of what we expected. Why do we expect it after Labor Day? We're in the fall, and what does that mean? It means that typically our stocks rise, meaning there's not as much consumption. People aren't traveling as much. It's not really the heat of the summer here in the Northern Hemisphere. Remember, the Northern Hemisphere is the straw that stirs the drink in the oil markets. That's where the consumption comes from. That's just the way that it's been seemingly forever. Perhaps that'll change someday. Third paragraph of the EIA inventories, really the summary. U.S. commercial crude oil inventories, except those in the SPR, increased by 0.8 million barrels from the previous week at 419.1 million barrels. U.S. crude oil inventories are about 4% below the 5-year average. Now, this has to change. If we don't see those supplies build, it's tough to price crude oil where it's at right now. Remember, we're still above that long-term Fibonacci, that long-term support zone right around 65. The bidders are going to protect that level as long as they feel like there's a potential shortage on the horizon, if not already a shortage. And the real question that I get every single week is like, well, what does that mean, for immediate pricing? And I always say the same thing. It doesn't necessarily mean that you're going to see a big crash in oil prices just because you get one number, or a big rally just because you get maybe a decrease or an increase in supply. But that's sort of what happened today. Right there was your level. Boom. There was your number dropped. You got the big sell-off, and then you got the buyback, and you're just heading north on a freight train. There's two reasons for that. Number one is that we're still running that 4% deficit over a 5-year period. And number two, you had a major game changer last night in the U.S. presidential election. I sort of put this out on many platforms yesterday. The idea was you're going to see, when it looks like Trump may, in fact, win the election, you're going to see crude oil prices fall. Why? The commitment to drilling, the commitment to opening the pipeline. I don't know if anybody watched the debate last night. He was talking about pipelines a lot, talking about taking Keystone off and firing up Nord Stream in Europe. And when you hear that, the goal is going to be to drill a ton. And then the other thing is going to be what? It's going to be to get those pipelines online. That means a tremendous amount of crude oil hitting the global market. That's Trump's ace in the hole. That's what he'll look to do to really – he can do a lot of it by executive order, so he doesn't really need the power of Congress to do that. He doesn't need it. Traders know that. They're not stupid. They understand how big politics can happen. Now, Harris, on the other hand, even though there was going to be no fracking ban in Pennsylvania or whatever, she's been on record repeatedly being pro-fracking bans, limiting that, transitioning to green energy, climate change agenda, whatever you want to call it. The idea there is you're not going to get that. You may get the drilling. Those leases that are active may, in fact, stay active, but you're not going to get something like the Keystone Pipeline. You're not going to get that oil out of the ground to market. It's not going to happen. Energy traders know that. They know it intuitively. So when we saw the debate come in, these are the betting odds that were about 50-50 yesterday. They jumped significantly for Harris. Most of the pundits, most of the media believe that she gave the stronger performance of the two candidates. A lot of that is all in the eye of the beholder. It depends on what you believe and who you believe. For me, it was tough to watch. It was a lot of finger pointing from both sides there. And I didn't really care for the moderators because I'm not a big fan of the media. But what I will say is it definitely drove crude oil prices up. And this was sort of something that let's go to WTI futures. And this is what I trade. There's some range numbers, almost caught that top. It's just been a tough day to get ranges. But right here, I sort of had this area outlined right after the debate. This is a 5-minute chart, okay? This is a 5-minute chart on WTI crude oil, and what do you have? About 7 p.m. my time, 9 p.m. Eastern, and this was about the length of your debate, somewhere in there, about an hour and a half. It was long. I think they need to cut those things down to 30 minutes, but about an hour and a half. And right in here, you saw the big jump, and this is sort of when Harris started to get the upper hand in the debate, is what it looked like to a lot of folks, and that's what'd you get. You got a real strong finish, too, as well. A lot of folks, I took some flack for saying this last night. I said that right there shows you that correlation between WTI crude oil and your presidential race. That's why elections matter. That's why politics is going to be the number one market driver in the world. No question about it for the next 6 weeks. Absolutely no question. If you're not up on politics, you need to start getting acquainted with the presidential race. I'll do the best I can to help. But right there, you sort of saw this rally. So we were up about 1% off of these lows. You take a look at this low down here, 65.91, and a nice big rally up there at 66.41. So what can you really say? Low 65, 66.41, about 50 cents. There's volumes coming in, sure, but nowhere near what we get during the U.S. trading day. Well, take a look at what's happened since then. I would argue that area may be one to watch and maybe a serious area of downside support that may, in fact, draw bidders for quite some time. Look what happened today. Boom, there's our debate. Flat, there's the break. Volume starts coming into the market when? Right around that London Open. Traders are getting back at their desks. Pullback during the U.S. session. What do you got right there? CPI number right in here. Crude oil inventories right there. Wipe out all those longs, and now look where crude oil is right back up. I'm still bullish, guys. I'm still bullish here, WTI crude. And if, in fact, it does look like Harris is going to get the upper hand and be your president-elect, you're going to watch WTI crude oil go way up just because the markets and the energy traders aren't going to believe any of what they heard last night about not banning fracking and continuing to produce oil in large sums. I'm bullish crude oil. I hope that answers your question, Bobby Bob. Other than that, I mean, that's I'm running long here today, but there was a lot to go over. Be ready for anything. As far as the euro goes, we outlined the Euro USD. That's more than likely going to be the big mover and shaker here. Let's go over one more of these. Euro Great Britain pound. Been a lot of people asking me about the Euro Great Britain pound because it's moving and it never really moves ever. Let's go to a weekly chart. What do you have? Nice sort of bottom here. Nice big rally and then a sell-off. So there's a couple of ways that I would be looking to trade this thing if I was trading it. Keep an eye on that low. July's lows. That's the yearly low. You're welcome, Bobby. That's your yearly low. I'd be looking down there, definitely. If, in fact, you do get a big move, that's a bid. Got to be bidding down there. What is that level? That low is at 83, 83, so somewhere around 84. 84 and a quarter is probably a pretty good bid. I would be bidding 84s more than likely. Real similar to what we did on that Japanese yen trade. But if you wanted to trade some Fibonacci's, or maybe you wanted to trade – I mean, you could have traded a trend line there, but the trend line breaks over. I'm not going to unpack that right now, but a spike high here and then a spike low there. You got something right there. What do you got as a sell? So we've got 84, 85. So we got about an 85 sell at the top. I'd be looking to sell this 84, probably right around 84.80. So you got an 84.80 sell, and to the bottom you got an 83.81 buy. So we can sell it, we can buy it, we can do whatever we need to do. All we need is a move, and obviously the catalyst there is going to be the ECB that comes online during the European session. So that was definitely one to watch. I put a trade idea out earlier on that US 30. I think it's going to be a pretty darn good one. So definitely keep an eye on that. All right, guys, I've droned on long enough. I want to thank everybody for joining me across all the platforms. You guys know where to find us now. We're in the trading room. We recommend you join us in the trading room. You can definitely reach out, private messages, whatever you need. We're also on X. Be sure to check us out on X, LinkedIn. We're really all over the place, all over YouTube. So get in there. Also check out our YouTube channels. Forex Signals TV, we post there, and then also on How to Trade TV at howtotrade.com. Well, it's not a .com. Just go to How to Trade on YouTube. You'll find some videos. We put a few strategy videos out there that we think you're really going to like. Mark Corp, thanks, Coach. All right, guys. If you have any questions, be sure to reach out. Thank you for joining me. Like I said, this one ran a little bit long, but we had a lot to cover. Politics is huge. Monetary policy is huge. We didn't even talk about geopolitics. We could have went for 4 hours here today. A lot going on, guys. Movers and the shakers. U.S. dollar, not so much. The euro, be watching the euro pairs as we roll into tomorrow's session. That's it for now. All right, everybody, trade the action well, and we'll talk soon. See ya.